Growth stocks are shares in a company with earnings growing faster than the market average. Though they have a high earnings growth record, only on rare occasions do they pay dividends, and they are priced higher than the general market. But investors buy them in the hope of capital appreciation. Growth stocks are also seen to have more risk because they tend to be relatively volatile and to react faster to market swings. Considering all of this, it is important to carefully choose what growth stocks to invest in. One way to see what stocks have promising prospect is to follow the focus and gain insight into the choices made by smart investors on Wall Street. In this video, we delve into the Securities and Exchange Commission, or SEC, reports to see the 4 favorite high-growth companies added to their portfolios in the second quarter. Which growth stocks would you choose? No idea? Then continue watching this video. Don't hesitate to hit the subscribe button and turn on your post notifications. Feel free to like this video as well and leave a comment below. The Securities and Exchange Commission, or SEC, is the independent federal government regulatory agency charged with protecting investors, regulating the public offer and sales of securities. They oversee securities transactions, activities of financial professionals, and mutual fund trading to prevent fraud and intentional deception. It is required that large investors with more than $100 million under management report their positions for the past quarter to the SEC regularly. This is advantageous to us because it helps us gain insight into the choices and trends among major fund managers. One thing we can note is that these professional investors particularly have their sights set on growth stocks. Which growth stocks have their attention from the second quarter? Let's find out. Number 1. Amazon. One of the big 5 companies in the U.S. information technology industry is Amazon. And to think this leading company was founded in a garage. Now a multinational technology company which has been referred to as the world's most valuable brand, it focuses on e-commerce, cloud computing, digital streaming, and artificial intelligence. When we talk about a favorite on the buying list of successful fund managers, this one tops the list for a good reason. Giants like Susquehanna International, Viking Global Investors, and Renaissance Technologies bought 334,200 shares, 293,150 shares, and 244,800 shares, respectively, in the second quarter. The company also holds the place of Viking's largest holding, making up 5% of the portfolio. We can see why Amazon holds a strong position in online retail and in cloud services. It is estimated that the company's online sales market share in the U.S. will reach 40.4% by 2021, 33 percentage points more than the nearest competitor. Amazon Web Services has also experienced significant growth, and there is the prospect of Amazon's operating cash flow more than doubling by 2025. Number 2. Coinbase Global. Coinbase Global is a secure online platform for trading digital and cryptocurrency, which has become a favorite for growth stock investors. We can't quite have an accurate comparison with its competitors because it only just made its stock market debut in April, but we can note that investors like Tiger Global Management, Citadel Advisors, and BlackRock took hefty stakes in the crypto exchange. This might be because Coinbase is experiencing a soaring increase in its popularity, and the number of users, which jumped from 1.5 million to 8.8 million in 1 year. It is expected that as the price of Bitcoin and Ethereum rises, more is being traded on it, and the greater Coinbase's revenue will be. Its current stock price is $256.77. This particular investment can be a risky one, best compared to playing with fire because there are low barriers to entry, meaning an alternative platform can emerge quickly, and the turnovers move along with the volatile price of Bitcoin. Number 3. Snowflake. The cute-sounding Snowflake acts as a proxy on the torrid growth of cloud computing giants. With competitive advantages, Snowflake provides tools that help companies compile, view, analyze, and share massive amounts of data in an easy way. Professional managers like Tiger Global, BlackRock, and Renaissance Technologies are having a field day with this growth stock. There has been an additional 7.8 million shares, leaving 184.6 million shares in the hands of major investors. Though it currently has low valuation, the company has very strong competitive advantages. Unlike its competition that bill on a subscription basis, Snowflake utilizes a pay-as-you-go platform that gives users a more transparent experience. The platform is also exquisitely designed to aid ease in sharing data, even between competing platforms. The stock price is presently at $283.76. However, this is a stock for patient investors because while we are certain that Snowflake has impressive growth and significant potential, with the valuation of 74 times expected revenue in 2022, it could take years for Snowflake to live up to its high rating. Number 4. Zoom Video Communications. Zoom is a word that has become a part of our lives in present day, and it is no surprise that it makes the list of favorite stocks on the buying list. Zoom Video Communications is a communications technology company that offers video telephony and online chat services via a cloud-based peer-to-peer software platform. The platform is often used for teleconferencing, telecommunicating, distance education, and social relations. The company's share price peaked in October 2020 and went down by half in the second quarter, cueing investors to latch on to buying opportunities. Reports rose by almost 11% to 138 million. Though most countries have lifted the lockdown and office work has resumed, Zoom has proven that it can improve the hybrid work model. The company also has growth ambitions, which it has translated into acquisitions, most recently with its announcement of the acquisition of Five9. One thing we note is that the CEO and founder Eric Yuan has a large stake in his company, which can be encouraging to investors to put faith in the company's future. Those are the stocks successful fund managers chose in the second quarter. What are your thoughts? What would you be investing in? Like this video and leave us a comment below. Feel free to also join the money-making community by subscribing to this channel. Don't miss out. Stay up to date with valuable information by turning post notifications on. Thanks for watching our video. We already have a ton of helpful videos on our channel that you can check out, and we do hope to see you in our next. Bye for now.